The year is 2025. The global economy is a tightrope walk, and the specter of tariffs looms large. President Trump, known for his unpredictable policy moves, has proposed a 25% tariff on all goods coming from Mexico and Canada. This isn't just about trade wars and political posturing, it's about a precious metal caught in the crosshairs: silver. Why silver? Because Mexico and Canada are giants in the silver market. They are veins of silver pumping metal into the global economy. Disrupt these veins and the effects could ripple across the world. The proposed tariffs target a vast range of imports. From avocados to auto parts, the impact would be widespread. But for investors, the silver market stands out as a potential powder keg. Will these tariffs be the spark that ignites a silver price boom? Mexico, land of sun, tequila, and silver. This Latin American nation isn't just a major player in the silver market, it's the leading producer, period. In 2025, Mexico is projected to mine nearly a quarter of the world's silver supply. Think about that for a second. One country supplying a quarter of the global demand for a metal used in everything from electronics to solar panels. Now imagine a 25% tariff slapped on every ounce of silver entering the US. The US, for its part, relies heavily on Mexican silver. In fact, it's the largest importer of Mexican silver. A tariff would throw sand in the gears of this well-oiled machine, driving up costs and squeezing supply. Tariffs aren't surgical. They don't just impact the target country, they send shockwaves through global supply chains. The US relies on a delicate balance of imports and exports, and the silver market is no exception. With tariffs on Mexican silver, US manufacturers would scramble for alternatives. Canada, the third largest silver producer globally, might seem like a solution, but Trump's tariffs target them too. This double whammy tariffs on both Mexico and Canada creates a perfect storm for supply chain disruptions. And when supply chains sputter, prices climb. Suddenly that shiny metal used in smartphones and solar panels becomes a lot more expensive. The silver market, already feeling the heat of potential tariffs, is about to get hotter. The anticipation of these tariffs has already caused ripples, but the real storm is yet to come. Investors are on edge, watching every move in the market with bated breath. Two more elements are at play: stockpiling and inflation. Remember those COMEX warehouses? They are becoming central to this unfolding drama. They're like giant vaults where investors store physical silver. These warehouses are not just storage spaces, they are the heartbeat of the silver market, reflecting the pulse of investor sentiment. And guess what? They're filling up, fast. The speed at which these vaults are being stocked is unprecedented, signaling a rush to secure assets. In just the first few weeks of 2025, over 22 million ounces of silver have been added to these stockpiles. Investors are nervous. This massive influx is a clear indicator of the anxiety permeating the market. They see tariffs on the horizon, and they're buying up silver like it's going out of style. The fear of impending tariffs is driving a buying frenzy, as everyone scrambles to secure their share. This buying frenzy puts further pressure on an already tight market, pushing prices higher. And then there's inflation. The combination of these factors is creating a perfect storm for silver prices. Tariffs, by their very nature, increase costs. They act as a tax on imports, making goods more expensive to bring into the country. Those costs get passed down to consumers, and suddenly, everything is more expensive. From groceries to electronics, the impact is felt across the board. Silver historically has been a hedge against inflation. When prices rise, silver often becomes a safe haven for investors looking to protect their wealth. When the value of the dollar falls, silver tends to rise. This inverse relationship makes silver a critical asset in times of economic uncertainty, providing a buffer against the eroding value of currency. Section 5: Silver's industrial might, from solar panels to smartphones. Silver isn't just a shiny metal stashed away in vaults, it's an industrial workhorse. It's in our electronics, our solar panels, even our medical devices. Think about the sheer volume of products that rely on silver. Smartphones, laptops, electric vehicles, the list goes on. Now imagine the cost of silver skyrocketing due to tariffs. The impact wouldn't be limited to Wall Street traders, it would ripple through entire sectors. Manufacturers would face higher production costs, potentially leading to price hikes for consumers. The solar industry, already grappling with the challenges of renewable energy adoption, could face a significant setback. Section 6: The allure of the undervalued, silver versus gold. Gold, the ultimate safe haven asset. When markets tumble, investors flock to its shimmering embrace. But what about silver? Often overshadowed by its more glamorous cousin, silver has its own story to tell. In 2025, silver is looking decidedly undervalued compared to gold. This price discrepancy, coupled with the looming threat of tariffs and surging industrial demand, is making silver increasingly attractive to investors. It's like finding a hidden gem in a dusty attic. The value is there, waiting to be unlocked. And as the silver narrative gains traction, supply chain fears, inflation hedging, industrial demand, investors are starting to take notice. Section 7, Whispers of Uncertainty, Echoes of Opportunity. Uncertainty. It's the lifeblood of the market. And in the silver market, uncertainty reigns supreme. The mirror of tariffs is enough to send investors scrambling. The silver market thrives on speculation. Will the tariffs be implemented? When? What will the impact be on supply chains? These unanswered questions create a breeding ground for volatility. But with uncertainty comes opportunity. Savvy investors understand that market swings, while unnerving, can create significant profit potential. The key is to identify opportunities amidst the chaos. And in the silver market, opportunity is whispering. Section 8. The potential outcomes, a silver lining? So, what does the future hold for silver? This precious metal has always been a subject of fascination and speculation. From ancient times to modern financial markets, silver has played a crucial role in economies around the world. Will tariffs be the catalyst for a price boom? Trade policies and international relations have a significant impact on commodity prices, and silver is no exception. The truth is, no one knows for sure. The market is influenced by a myriad of factors, making it unpredictable and often volatile. But let's play out some potential scenarios. By examining different possibilities, we can better understand the range of outcomes that might unfold. Scenario 1. The silver surge. Imagine a world where tariffs are implemented, causing disruptions in supply chains. Tariffs are implemented, supply chains snarl, and silver prices soar. The scarcity of silver drives its value up, benefiting those who invested early. Investors who saw the writing on the wall and took a position in silver are rewarded handsomely. Scenario 2. The stalemate. Here the situation is more complex. Tariffs are delayed, perhaps indefinitely, as political winds shift. The uncertainty keeps the market on edge. The silver market remains volatile but range-bound, with no clear direction. Investors are left guessing, trying to navigate the choppy waters. Scenario 3. The silver slump. Tariffs are averted altogether. In this scenario, the market reacts differently. Global trade tensions ease and the silver market, relieved from the pressure, experiences a price correction. Prices stabilize and the market finds a new equilibrium. The reality is likely to be a messy combination of these scenarios. Markets rarely follow a single path, and silver is no different. The silver market, influenced by a complex web of factors, will chart its own course. Investors must stay informed and be prepared for any eventuality. Section 9. Charting the silver surge, an investor's playbook. For investors, the potential silver surge presents both risks and rewards. The market for silver is known for its volatility, which can be both a challenge and an opportunity. Understanding the dynamics at play is crucial for making informed decisions. How can you navigate this volatile landscape? It's not just about following trends, but about understanding the underlying factors that drive these trends. Market sentiment, economic indicators, and geopolitical events all play a role. Here's a potential game plan. 1. Get informed. Don't rely on headlines. Dive deep into market reports, financial news, and expert analyses. The more informed you are, the better your decisions will be. Delve into the intricacies of the silver market, understand the forces at play, and track tariff developments closely. 2. Consider your options. The silver market offers a variety of investment avenues. Explore the various ways to invest in silver physical bullion, ETFs, mining stocks. Each option has its own set of advantages and disadvantages, and it's important to understand these before making a decision. Each carries its own risk profile and potential returns. 3. Manage your risk. Risk management is a critical aspect of investing, especially in a volatile market like silver. Don't bet more than you can afford to lose. Set a budget for your investments and stick to it. This will help you avoid emotional decisions that can lead to significant losses. Diversify your portfolio and consider hedging strategies to mitigate potential losses. Diversification can help spread risk across different assets, reducing the impact of a downturn in any single investment. The silver market, like a game of chess, requires foresight, strategy, and a cool head. Every move should be calculated, considering both the immediate and long-term implications. By staying informed, managing risk, and making calculated moves, investors can position themselves to potentially capitalize on the silver surge. Remember, successful investing is not about luck, but about strategy, discipline, and continuous learning.
Hi, I'm Amelia from GiveMeTheGold.com. Picking the right precious metals company is important, so today we will go over 3 highly recommended companies from GiveMeTheGold.com. Our panel of experts have picked these companies based on reliability, customer service, and other factors. You can also see our complete list of companies and more information by going to our website at GiveMeTheGold.com. Our first recommendation is Augusta Precious Metals. They have been a trusted name in the precious metals industry since 2012. They are the top recommendation for accounts with $50,000 or more to invest. They combine their top education and white glove services to make it an all-around excellent experience for their investors. To get more information, visit easygoldinvestments.com or call them at 1-855-470-4636. Our next recommended company is GoldenCrest Metals. They are a standout choice for investors seeking to start the gold IRA journey with a minimum initial investment of only $10,000. GoldenCrest Metals has a customer's first approach and great guidance by their professionals to help you get started. Visit their website at goldencrest.info. Our last recommended company for today is Colonial Metals Group. Colonial Metals Group stands out for its competitive promotional offers designed to give investors added value when starting a gold IRA. They provide access to exclusive deals on precious metals and other perks for first-time clients, including a free safe. To get more information, visit freegoldkitnow.com. You can see all these links for your convenience underneath the video in the description. To see the extended list of all the company, visit the website at GiveMeTheGold.com. I'm Amelia from GiveMeTheGold.com. Wishing you the best in your financial endeavors, and thanks so much for watching.